Welcome to the ZoomInfo Labs podcast. I'm Ben Salzman.
And I'm Millie Beetham. Today, we're super excited to have Mark Roberge, co-founder of Stage 2 Capital and Harvard Business School professor, on the podcast.
Mark was HubSpot's first CRO, where he built one of the most successful go-to-market engines in SaaS, and he's the author of the Sales Acceleration Formula, one of the playbooks for anyone in go-to-market.
In this episode, we dive into Mark's thoughts on building successful sales teams, the strategic shifts founders need to make as they scale, and what lessons he likes to share with the next generation of sales leaders. Let's get into it.
Welcome to the ZI Labs podcast. I'm Ben Salzman.
I'm Millie Beetham.
And we are super excited today to welcome Mark Roberge, the co-founder of Stage 2 Capital. Mark's groundbreaking work spans from his role as HubSpot's first CRO, shaping go-to-market strategies through his teaching at Harvard, and his current work at Stage 2, and of course, your highly acclaimed book, The Sales Acceleration Formula. Mark, welcome to the podcast.
Thanks, Ben. Thanks, Millie. Great to be here.
Really excited to have you on. We have a million questions for you, but for our audience that doesn't already know you, maybe just do a quick introduction for them.
Yeah, I think you did a pretty good job. I mean, I think I was an engineer by training and started my career coding. At a young age in my career, maybe 23, I discovered entrepreneurship, which wasn't a big career path in the late 90s when I was coming out, and obviously have become one. And I've always considered myself an entrepreneur first and foremost since. Did a number of startups. HubSpot was the last one I operated in, and now, as the fourth employee there and first salesperson. And that was obviously like a life-changing experience. And everything's been serendipitous since then. Like going to HubSpot, going to sales, writing a book, joining the faculty at Harvard. I teach sales and entrepreneurship there. Starting a VC firm weren't things that I meant to do. I set out to do. They were opportunities that presented themselves and sounded interesting. And I kind of ran, I guess, a test. And those tests had lots of energy around them. And so, yeah, I spend most of my days these days investing. We're on our fourth fund at Stage 2 Capital and backed by 800 CROs and CMOs in the sector, including many of your executives. I spend the other time professionally teaching and personally raising my boys and trying to get some workouts in. That's it.
There you go. I love it. We're gonna come back to the boys and the workouts. And Mark, just as it's some shared history, Millie and I currently are working with HubSpot every day. They're one of our ZI Labs customers, and we're actually advising them on their go-to-market. So, it's like sort of worlds colliding here. Tell us a little bit about your journey from the time at HubSpot to Stage 2 and more detail on how that kind of evolved.
Yeah, so I literally was just going to take some time off. I mean, my boys were 7 or 8 at the time, and I was just so blessed to have the flexibility to take that time off and be like a much more involved dad than most parents can. And fortunately, serendipitously, Harvard reached out HBS was just like, yeah, this is like 2012, after the 2008 banking crisis, there's just like less enthusiasm amongst the student body to go into consulting and banking and much more to do entrepreneurship. So they had to really hustle to create new classes, recruit new faculty. And I was fortunate they asked me to build out the sales curriculum and teach it here. And so I did that for 5 years full time, honestly. And I was still very active as an angel investor, board member. A lot of the VCs from HubSpot, Sequoia, General Catalyst would ask me to hey, we just made a Series A investment. Can you help them? So I'd spend a day a week I'd choose one company a quarter and spend a day a week with them. And I did it for a dozen plus. Some were really successful, like Asana went public and Drift sold for $1 billion. And some were not. And it was just a unique time in my career that I wasn't working 80 hours a week on one company. I was seeing all of these, and I reflected on why the success versus not. And so many of those reflections came back to when they decided to scale the sales team and how fast. And I just felt like the founders and the board members weren't taking that they weren't giving that key question enough analysis. They were kind of copying what Snowflake or ZoomInfo did in their first 5 years, right? And they weren't looking at what they were capable of. And so that led to me creating a framework called the Science of Scaling that helps founders and boards calculate when they should scale sales and how fast. And that eventually led to the founding of Stage 2 Capital around that methodology to try to create that impact on the ecosystem.
That's fantastic. And talk a little bit about how the sales acceleration formula fit in there. Like, it feels like that's a bit of the Bible for a lot of folks that we interact with. So, first of all, kudos.
I just signed a contract with Wiley. I've been trying to get time to do this, and finally certain things happened that I needed to do it, to write the science of scaling now. So that one's coming out. I'm going to deliver that in June. I haven't told many people, so you guys can talk about that. And we can talk about the differences there. That currently is a 45-page ebook. The sales acceleration formula, that was interesting. I was in my final year or two of HubSpot. I was having breakfast with Jill Konrath, who some of you might know. Unbelievable author in sales. Right? So many, selling to big companies, agile selling, like so many. And we talked, and she just took out a piece of paper and was like, The Art and Science of Sales by Jill Konrath and Mark Robert. She's like, I want to write this book with you. And I was like, Jill, I got like a 470 on my verbal and SATs. Like, I'm not a good writer. But she's like, don't worry, it's going to be great. So she's like, write a chapter and I'll write a chapter. And she was like, read it. She's like, this is awesome. This has to be your own book. And we'll write the second one together. And that was the birth of sales acceleration formula. And so it made sense for HubSpot because we were moving into the CRM. So it made sense to put a piece like that out there. And it really was just like, I guess, an autobiography unintentionally of like, I had grown, my brand had grown to been this kid out of MIT that was a former programmer and a crazy quant that found himself in the sales role and built a sales team from the ground up with data and science. And people wanted to hear it. And like, I was doing my commute, taking calls with like first salespeople, like entrepreneurs talking about this stuff. I knew all their questions. I knew what I said that helped them. And that was just the book. It was just like how to build, think about a sales system. So think of it as a system as opposed to magic,
Do you think that your role in being an operator was critical to sort of having those aha moments as you moved into like penning these frameworks and moving into VC?
Definitely. I think like Millie, I think there's something really broken in venture. And I'm not necessarily trying to position it like stage 2 is the answer. But I just think like there's not enough operating experience in the venture capital, I think, like partnerships. And I go and I go pitch big institutions, right? Pension funds and endowments, and they complain about it. They're like, yeah, in the 80s, it used to be like a much smaller ecosystem. It was a bunch of people who were successful entrepreneurs that we gave money to invest, and they helped these companies, and it worked. And in the last 20 years, it's become this like, you have these professional VCs who've never run a company before. They've never led people. They've never built a culture. They've never hired and fired. They've never rolled out a strategy, and it's broken. And I'm not saying those people are not good. They're amazing investors, way better than operators. Like, you've got these people who are career investors that are just like unbelievable investors. They'll like look at 500 companies. They'll do like 6 months of diligence and say no and brag about it. That kind of discipline. They know everyone in the category. TAM analysis, they're so good. But what's broken is they make the investment and then they join the board and they tell the CEO how to build a sales team and how to build product. And it's bad. And then you have these operators turn VC who are good in that, but they tend to invest in problems because they know how to fix them, but they don't realize they don't have the authority or scale to do it. So the whole ecosystem is busted.
Totally.
Oh, that's so fascinating. So in terms of like, now you're really close to sort of the next generation, right, of entrepreneurs and ultimately these investors. Like, what are some of the things that you're teaching to these ambitious founders? Like, what do they need to know to be able to address like some of those potential pitfalls as they move into sort of their careers? 2
things that we've done. We think that we're the best firm to go out and help you with your sales strategy, your go-to-market strategy. And we've reinforced that in a number of ways from our strategy. The first one is our LPs. Like most VC firms, the LPs is like the GE endowment, like a pension fund, the Harvard endowment, the like, Chicago labor, it's these big institutions, right? And they're just like looking to make, returns. We have that, we have the MIT endowment and we have a couple of those, but we have 800 of people who are like the CROs and CMOs in tech, Snowflake, HubSpot, Salesforce, ServiceNow, Datadog, and so we can mobilize. They gave us their money and then they want to help. So that's like point number one. And then point number two is we invest through a pod model. Like in most VCs, it's like, hey, you're the former president of Atlassian. Here's $50 million, go invest. Or you've been investing, you graduated from Harvard 20 years ago and you've been investing and here's $20 million to invest. But we are like, we take a career investor and team them up with an operator and form a pod and they invest together. Here's 50 million, go do it. So from the opening introduction of the company through the diligence process, through the selection, to the onboarding, to the boardroom, the two people do it together. So they're totally bought in. Not like taking some venture partner and be like, oh yeah, we made this investment in 2 years. It's going terribly. Can you jump on the board and try to help them? Right? Like, so yeah, that's how we try to implement it. And like, I think as you're building your cap table and your investment team, just make sure you have both views. As long as you can do that across funds.
And I'm thinking about how, like, through your teaching at Harvard as well, that must be showing up in terms of some of the principles that you're sharing with your students. Like, look for that as they're like going out trying to raise, et cetera.
Yeah, definitely. And like, a lot of that for sure is there with the entrepreneurship. And it's really part of it too is like responsible growth. That's a big deal for me. I think there's a lot of irresponsible growth out there. And I think like, it's just to unpack that. It's kind of like everybody falls in love with that story that makes the front page of TechCrunch, Klaviyo, like Snowflake, Datadog. But there's 100 other stories where they tripled the sales team overnight and went under. And like people don't realize that you don't have to necessarily. At some point, things can break and you gotta like fix it before you throw sales bodies at it. But like people don't get that, and that causes way more failure in the ecosystem than is necessary. Like there's a lot of people who've made money when they tried the venture path, it didn't work. They took a step back, they took their $30 million business, got it to profitability, reintroduced some growth, sold it for 500 million and made 50 million bucks, but no one hears about it because that's not like the beautiful story. Yeah. And so instead they try to triple, they run out of money and they ruin what could have been a great business and a great outcome for everybody.
And Mark, talk to us a little bit about some of the, like tactically speaking, some of the themes that are emerging around actually driving demand these days. Like it feels like the world's changed from even a few years ago with AI, so we'll get to that as well. But just what are the principles you're trying to drive home around modern demand generation?
With you just got to sign up to Zoom Info.
Perfect. We're good. Cut. We're done. We're out of here.
Best episode yet. Moving on.
But to your question, Ben, it's interesting with demand gen. I feel like you always have to be in an experimental mindset because for two reasons. Number one, over longer periods of time, you always someone gets wind of this new approach and it works for a couple of years and then it becomes oversaturated. Starting with the telephone's invented. Oh, you could cold call people. It works for a decade, then it goes, email's invented. Oh, you could email people and then people block it out. Social media, content, where we'd exploit at HubSpot and then arguably it gets saturated in certain areas. So part of this is trying to find the next wave. And then the other part is if content works for this company, it doesn't necessarily mean it's going to work for you. There's a lot of inappropriate cutting and pasting around all of go-to-market strategy. And you have to be really hyper-focused on your context. And I try to frame context as who are you selling to? Big difference between CMOs versus CFOs versus CIOs, enterprises versus small businesses, Japan versus France versus Brazil. And then what are you selling? Big difference between, pencils and jets. right? So like you have to be very aware of your context as you think about everything in a go-to-market strategy. And to your point, Ben, in terms of the demand gen strategy you choose. Now, couple things I'm seeing energy around. Early energy is, full disclosure, we're an investor in Sendoso. I'm not saying it for this reason, but like the gift sending thing is working in certain contexts, especially for big deals, ABM, ABS. It's a way to stand out in the noise, and there's a way to operationalize that. I'm pretty excited about community-led growth, CLG. I think that's something that open source companies have been doing very well for 20 years. And now you're starting to see companies like Figma and HubSpot that are like applying that in the application layer and defining roles and helping those roles find people around them. That's a really cool motion. To your point, Ben, AI, like that's huge. I mean, you got to be investing in some experimentation there. I can't say that there's been massive breakthroughs. Like I do have a lot of examples of companies who've like perhaps seen a 20 to 30% streamlining, which is great. But I really think we're going to get to like a complete workflow redefinition and drop if today's CAC in a business is like 30,000, I think it could get down to 3,000. Like over time, it's going to take a couple of years. So we haven't seen that yet, but that's going to be a big deal.
And by the way, Chris Rudegrave, a friend of the pod and lives near me. He's a great entrepreneur. And I guess, Mark, just pushing one step further on like what could come next. Is there any green shoots where you're like, no one's talking about this, but this will be a new channel? Or
yeah, it's interesting, Ben. Like I can take you through a sequence here. So a year and a half ago, I stood up. We had our LP meeting at MIT, and we had like 200 CROs, CMOs in the room. And I'm like, yeah, AI is coming. They had just launched ChatGPT like 4 or 5 months prior, so it's still kind of new to everyone. And I was like, hey, we need to win this AI investment game, especially in go-to-market. And I'm like, how many of you are trying to do more with less? And everyone's hand went up. With a lot of pressure from the street. A lot of them are running public companies. I'm like, how many of you think AI is going to be an important input to that need? And all of them, we need you. So I'm like, if you want to see the deal flow we're seeing for usage in your companies of the go-to-market AI startups, just send me a note. And I got like 120 CROs and CMOs like, yeah, I want to see what you got, what you're seeing, because we want to pilot it and try to break this, try to figure this out. So I posted that on LinkedIn. I got 250. I was like, if you're building go-to-market AI tech as a startup, I have all these CROs that want to test it. So I got like 250 applications in like 2 weeks. And we started to see everything. And I promoted every Monday and Thursday, we promoted 4 of them to the CROs. And it set up 80 meetings. And I think only there were like 4 pilots and no rollouts. And I was like, what? Like, what happened? And they were like, IT and legal shut it down. So I was like, all right, this is interesting. These big companies want to do it, but they have the standard red tape. I'm like, this is just going to accelerate disruption. And if these startups are going to adopt this stuff and the big companies are going to sit on their hands for a year, that's just adding to the disruptive risk. So I circled back to our portfolio and started implementing stuff there. And what I realized was what's going to impact the types of technology and companies that I think will make the biggest impact, say in 2025 from an AI standpoint on go-to-market are not good investments. Because I think we're in sort of like the hype curve right now. Like remember the beginning of the internet. We dialed up through AOL, we opened up a Netscape browser and we did a search through Alta Vista. That's what we were doing. None of those companies were great investments. Like they were eventually taken over. So that's where we are now is like, you have all these like Copilot tools, which are cool and can deliver like a 30% enhancement. And that's what people should be implementing over the next like year. But I don't think those are going to be the ultimate winners. And so like, that's what I'm trying to unpack your question, Ben, is like, do all the Copilot stuff if you're an operator. But what do I think it's going to look like? I'm trying to find like innovators' dilemmas where it's like it would be really hard for the incumbent to move their company there. And it's almost easier to start a company from scratch. And so like looking back on the on-prem to cloud shift in the early part of the century, pretty much every category was disrupted. You know, Siebel went to Salesforce, PeopleSoft went to Workday, BMC went to ServiceNow. And the reason why it happened is pretty much the same. And there were three innovators' dilemmas that happened almost everywhere. The first one was just like technical architecture. All these companies were like, you know, you had a disk, a CD, you put it into a server and you ran it on your computer. And suddenly you had to rebuild it for the cloud. That was a big undertaking that very few of them did. The second one was the pricing. They all charge like, hey, you want to buy PeopleSoft, you pay us like $5 million and you have it. Workday is $10,000 a year. They couldn't move to that. It would have destroyed their stock price. And the third one was distribution. Like they were selling through these fancy enterprise sales reps, but the cloud attackers did MQLs to inside sales teams and never met their customers. Those were the innovators' dilemmas. Like even if Siebel knew the right answer, I don't think they could have got there fast enough compared to Salesforce. So that's what I'm trying to think about. Like, what are those innovators' dilemmas now as we go into the AI architecture that once you establish that hypothesis, you can get there faster by building the company from the ground up. And so like, I don't know what they are. I mean, I have some hypotheses like to your, so some of the hypotheses, Millie, is like one of the classes I teach is called Disrupting AI here at HBS, Disrupting AI and Disrupting Silicon Valley with AI. And so I take 50 students. We're meeting with the COO of NVIDIA, the CEO of Waymo, the CRO at OpenAI. So I get to like talk to these people. And this is some of the narrative that's happening. One of them is seat-based pricing. You know, it's like if AI is successful in either completely changing roles as we know it, or significantly decreasing the number of salespeople or BDRs or engineers or whatever to do a task, that's going to really be hard for companies that have seat-based pricing. Now, they could move to consumption, but they still have to preserve their ACV. It's like Genzyme, you have 2,000 seats, you pay us $2 million a year. We're moving away from seats, but we still need you to pay $2 million a year. A native AI attacker who arguably could, you know, at some point will be able to possibly write code 80% faster and sell product at 80% less cost can charge for the same product at $200,000 a year. So that's tricky. Okay. A second one is like this whole there's a lot of narrative around unstructured data right now. I think you guys are playing into that too. So like the one way you looked at building an application in the cloud is like you had to set up a database structure. You know, like so you took data from, in your cases, right? Like from call, you know, let's say CRM, like you take them from like calls happen and like meetings happen and, you know, campaigns are run and that data is put into a database, structured, opportunities, leads, contacts, and then insights come from that. Like, where are we on this deal? Where are we in this quarter? Well, AI can skip that. Like there's more unstructured data than structured data. And if you had to like pick one structure and try to apply it to everyone, it's probably not optimal for each person. So AI has the opportunity to like, one, tap into 10 times more data because there's a lot more unstructured data, and then set up a structure that's unique to your business and then deliver the insights without, it's like kind of a black box. That's going to be pretty disruptive because like that means like you no longer have to enter data as a salesperson. And we're kind of seeing that. Like if we're trying to put together a forecast, like, yeah, 10 years ago, you had to have data from salespeople. Today, you have gone recordings and campaigns and usage logs. And like the best data to figure out a forecast is probably not entered by the salesperson. So, but how much work and architecture was built for the current CRMs to enter data? You eliminate the need to enter data and structure it. That's pretty disruptive.
I love it. And just as like an aside, Millie and I are going to go meet with the COO of Stripe later today, who's a big customer. And we're literally going to listen to a podcast from Notebook LLM on the way down with all the unstructured account AI stuff from ZoomInfo. and it's just a whole new world. Like no one entered any of the data that we'll be taking in on the way
Crazy.
to the meeting.
Yeah,
so.
absolutely. I guess on that, Mark, around sort of this multimodal approach to AI and maybe how like these other modes are really going to impact go-to-market. Is that something you're talking about or getting questions on from either like founders, right, that or aspiring entrepreneurs at HBS?
Yeah, definitely. I saw a demo coming up in an AI lab where, in fact, the entrepreneur like said, "I'm not going to pitch you. My AI bot's going to pitch you." And that AI bot had read everything I've written in my life in like seconds, which like that would take a year for someone to do. And the AI bot, like this wasn't quite there yet, but like where it was going was it was going to be an image of a person customized to the gender, race, age, and dialect that I trust most. That's crazy. That's crazy, right? And that's like possible now. You know what I mean? And like, and then it executes like a perfect discovery call. It's like, so let me, you know, it was just kind of like what piqued your interest in our lab, and you know, it just executed a really great discovery call. So yeah, I think multimodal is going to be important. I think Millie, one of the things I learned there. And someone recently asked me if I've changed my take on like SDRs as being the first role to get disrupted. And I have, because while I think our country and democracy will be at significant risk if we pass a lot of legislation to stop AI from disrupting jobs. The reason I say that is because other countries won't pass that, and they will surpass us as an economy and as a military power and like as technology. It would be bad for democracy. But there are certain situations where laws are needed. And one of them we call the watermark, what people call the watermark law, which is if you're AI, you need to tell the world that you're AI. I think we need that, because otherwise you've got people like jeopardizing, you know, government officials and important people. And so if we're going to have that, that's going to be tough for SDRs. If like you make a cold call and like the first thing you have to say is I'm an AI bot, it's like click, right? So I think there's other elements like where I'm seeing a lot of it today is in the PLG funnel, because it's inbound and the bar is lower of efficiency because you're competing with a bunch of like screen sequences, right? So anyway, bottom line, I think we're going into a multimodal.
And what's fascinating, Mark, is whether there over time the pendulum will swing where it's like, I actually want to confirm that this is an AI bot because the experience will be better. That's when it gets scary, I think. You're
seeing a big when people are surveyed, like, do you want to work with AI over a human? The older generations are saying, I want a human. The younger generations, I want AI, because they're used to that. I just want a fast, smart, factual, like good answer.
And Mark, one other question on AI and the impact. I think you talked a lot about how it's driving efficiency today, not necessarily, you know, effectiveness. And I think that's a really key distinction. When we get to effectiveness and possibly displacing jobs, whatever, do you have an early hypothesis on how those resources will be reinvested back into the business? If you can get to 20% savings on people costs,
sure,
where do you plow that back in?
I think it's probably the best sort of like representation of that right now is in our ops teams, you know, because like RevOps has had a great decade. Like RevOps I didn't have a RevOps team in the early days of HubSpot. I did hire like an enablement person that eventually became, but like this whole RevOps movement's been great. And, you know, one way of framing it is you have a bunch of frontline workers doing the work. Behind the scenes are those RevOps people that are making investments, technology, processes to make the frontline people more efficient. And like, if some of these jobs are redistributed, you might have a lot more of the frontline work being done by AI and agents and algorithms. And so like the humans are more in the back office. Whereas like right now the humans are on the front line doing the work and they're enabled by technology. And this might switch where technology is doing the work on the front line and the humans are behind the scenes just tweaking it. So I think in our space of B2B tech, you'll see a lot more people moving into what we see today as more operations roles. And like the humans are no longer really on the front line writing code and selling software.
Mark, I want to come back to where we started just a little bit, because I feel like we've gone through sort of this evolution, and you started with, I wrote the sales acceleration formula, then I penned this new framework as part of Stage 2 Capital, and now I'm sort of I'm writing that book, that next book. Yeah. What sort of fundamentally changed? Like, what did you sort of debunk of your own, right, in terms of where you're going? And maybe even since you've written this new book, have your thoughts and hypotheses even changed beyond that?
It's a great question, Bill. I saw that. Yeah, it's really more of an abstract framework that can be applied to almost any situation. The sales acceleration formula was a story about how I built the sales team at HubSpot. It was like at a point in time. It was literally like, this is how the HubSpot sales team works in 2012. That was the book. And so like, it gets back to what I was talking about the dangers of an inappropriate cut and paste. Is like, you have to have the ability to say that does apply to my business and that doesn't apply. And that's really the difference with Science of Scaling. Is now that I've had 10 years on the faculty here at Harvard, I've invested in 50 companies through Stage 2. I've evaluated 10,000 companies. Like I've got a more abstract viewpoint, and the book provides frameworks that are very instructive as to whether you should implement in this business and how. And that's the difference. That's one big difference. The second big difference is, again, the sales acceleration formula was how HubSpot sales team worked in 2012. This work helps you figure out where you are in the scale journey and how you have to adopt the go-to-market system based on where you are. You literally can calculate, like, it's product market fit, then go-to-market fit, then growth and moat. And you can use your data to calculate where you are. And then what does that mean if you're here, if you're in the product market fit discovery, what implications does that have on the salesperson you hire, how you comp them, how you generate demand, how you price your product? And that changes as you move beyond product market fit to go-to-market fit. So I got to practice how to say that very quickly, Millie.
Fantastic. And Mark, we know you literally have to go tell the Harvard faculty why your class is so great. So we're going to get you out of here on this one. Our motif question, or the question we ask every guest, is who's the smartest person that you've ever known, and what did you learn from them?
Okay. Yeah, I had to think about that one. It wouldn't be appropriate for me to say the genuine answer, because I'm a deacon in my church. I'm a spiritual follower and reader, and there's a long list of spiritual gurus that would be my honest answer. And I read of all religions. I like to study them all. But in work, it was really like my mentor, John McMahon, who is, has a lot of famous things. He was critical to my journey to help me see around the corner. I spent 4 hours a month with him, still friends to this day. And he was just really amazing at understanding the different stages of revenue scale and predicting what's going to happen. And the other people is Dharmesh and Brian. I mean, it was such a pleasure. They're so smart in different ways. Like Dharmesh is just one of the best visionaries I've ever seen in terms of what's coming. And that was critical to HubSpot. And Brian is like one of the best leaders I've ever seen. And one of the things I took from him was like, you always have to put your business at risk because your business is at risk. Like you see a lot of founders who get to 20 million and they don't want to mess it up. So they stop taking bets. But when you look at the Fortune 500 list from 1950, there's like 50 companies left. You are always at risk. And that's what Brian did so well, was he would distill where our risk is and literally put the company on the line because a bold decision was necessary to get us where we needed to be. And I think that's why HubSpot has gotten to where they are and continued to grow and be valuable despite a lot of different changes in the ecosystem over the last 20 years.
That's fantastic, Mark. We wish we could do this all day. We appreciate the time and joining the Zoom Info Labs podcast. Thank you for everything you do to lift up the community, to empower founders. And, I've learned a lot from you personally from afar. So to have you on is just incredible.
Oh, it's a pleasure, Millie. It's a pleasure, Ben. Thank you so much.
Thanks so much for listening to this episode of the Zoom Info Labs podcast.
With new episodes dropping every Monday and Thursday, subscribe to the show on Apple, Spotify, or wherever you get your podcasts. You can follow me and Ben on LinkedIn and visit zoominfo.com/labs to get in touch.